Welcome back here with what's hot on Cnbc TV 18. The other big story tonight, Reliance Industries continues its efforts to build its Lyndall-Bassell war chest, or so it seems. Today it raised 3,465 crore rupees from the third tranche of its Treasury stake sale. This takes the total amount raised by the company to a whopping 9,330 crore rupees. Joining us to discuss Reliance's plans, SP Tulsian of sptulsian.com and Suzanne Smith, the Managing Director, Government and Corporate Rating South Asia at S&P. Also with us, our colleague Sajid Mangat. Many thanks for joining us. Mr. Tulsian, let me start by asking you, sir, the timing of this Treasury sale. This is the third tranche that Reliance has sold. And, if you put it together with the fact that Reliance has spoken about its interest in Lyndall-Bassell, they've submitted a non-binding proposal so far. 2 + 2 is 4. It seems to make sense that this is a war chest that Reliance is building. Is it that obvious to you?
Shireen, that may not be the only reason, for selling the treasury stock. In fact, I would say that the primary reason for the company is to clean the balance sheet. If you see their FY09 balance sheet, for the first time in the consolidated accounts, the shares held by 3 subsidiaries as well as by the Petroleum Trust have been knocked off from the paid-up capital of the company. And that's the reason in consolidated accounts we have seen the EPS of the company standing at 108, while in standalone accounts it was at 98 rupees. So eventually, if you need to clean up your balance sheet, if you have to do that, you have 2 options before you. Either you extinguish the capital held by the Petroleum Trust as well as the 3 subsidiaries, or sell them in the market and mobilize a fund. I think the company has opted for the latter route, that they are selling the shares held by the treasury stocks, mobilizing the money, which could act as a war chest for their inorganic growth.
All right, Suzanne, let me put that very same question to you. How are you reading this move? Because your rating was downgraded from stable to negative. Does the fact that Reliance has actually done 3 tranches of Treasury stock sale change your outlook on the company?
Well, the rating on Reliance has not been downgraded. It's just we changed the outlook, and that outlook change came many months before the announcement of Lyondell-Basel potential acquisition. So what we have done with the announcement is to reassess the negative outlook and continue to maintain it. It's not technically a downgrade. As to what we would, how we view the sale of Treasury stock, we see it as positive. It does definitely adds equity and cash to their existing cash holdings. I think it's what remains to be seen is what they do with the proceeds. If it's used to provide cash payments for an acquisition, then it really depends on the assessment of the benefits of that particular acquisition. And if it's used to pay debt, that's generally very positive for credit quality. But so it really remains to be seen what's the use of the proceeds. But all in all, it's a positive step for the company.
Right, Suzanne. At S&P, you've been worried about the uncertainty of the size of cash flows for Reliance Industries. That's primarily because of the cases which is going on in the Supreme Court and the NTPC case. But if RL were to bid for Lyondell-Bassell, do you think a bid above $15 billion enterprise value, which has been the figure which even the Lyondell-Bassell has been quoting in its restructuring process, be good enough for this? And what would be the reaction of S&P if the bid goes above $15 billion for Reliance balance sheet and the leverage it's going to take for this acquisition?
Well, let me first comment on what you said about the reason for the negative outlook being tied to existing litigation and uncertainty in terms of revenues from gas fields. It's also tied to the overall downturn in the global economic conditions and reduced demand for oil products, maybe not so much in Asia but elsewhere, which has caused refinery margins to be depressed. So there's actually a number of reasons, some of which are linked to forces in terms of global economics. Your other question about if they were to raise the amount of the bid, I think it really depends on how they finance that all of the acquisition, and then our assessment of the potential cash flows that would come from the combined entities. We don't see a lot of synergies, but we do think there are some strategic benefits in combining the two companies. So it's not possible to give a definitive answer to your question without knowing a little bit more about how that would be funded and if that actually happens. I'm not sure that the company would be willing to bid that high.
Right. Let me get you in, Mr. Tulsian. You talked about the fact that cleaning up the balance sheet seems to be more the reason. If we look at the three tranches when this happened, we've seen a certain reaction in the market. Also, another thing to understand is RIL is no longer the RIL which saw heady gains of the past. We've started seeing margins being fairly stretched on this company. Are you also seeing this as an attempt, therefore, that you're sitting as a company on a huge pile of shares and you may as well make certain gains when the going is good rather than waiting for the market or the share to go down further, considering that margins are stretched and are likely to be for some time?
See, Vivek, I may not agree fully with that view, because unless until you find the buyer, which could only be the institutional investors, whether you talk of domestic or you talk of the overseas, you cannot really offload the entire chunk, which at least I'm expecting to be done by the company. If you take the total, inflow or the outflow for the entire transaction, it could be about $9 billion. Which I expect that they'll be doing it. So I don't think that one quarter results could really be an aberration. Yes, there may be varying a value of about 50 rupees per share. If you see the transactions having done in the month of September and having done in the month of January, there has been not virtually any variation in the rate. Only thing that it has been done at the cum bonus rate at that time, and now we have been seeing the transaction taking place on ex-bonus basis, maybe marginally lower by about 20-25 rupees. But equally there is a strong appetite by the domestic or the overseas institutional investors as well. And they cannot get this kind of chunk from the market unless until company really goes for a preferential kind of allotment. So I don't think this is all looks to be a calculated move having, done by the company, by having, decided or found the buyers for this such a big chunk, either on the domestic stuff or on the overseas stuff. Yeah.
Mr. Tulsian, in your opinion, will Reliance go to remove this aberration between the standalone equity and the consolidated equity in this current fiscal, or will it push it to the next fiscal?
See, again, Sajit, as we have discussed that, they've already given effect of reduction in FY09 accounts. So the same practice is going to, because you have to have the consistency. So the same practice will going to continue for FY10 also. Honestly, earlier I thought that this process can take about 12 months time, but the kind of liquidations they have been doing, first transaction in November, second in 4th January, third on 11th January, it looks to me that at least they'll be able to liquidate the entire chunk which is held by the Petroleum Trust on or before 31st March. And I won't be surprised if the equal quantity, to the extent of about 18 crore shares now held by 3 subsidiaries can also get liquidated by 31st March 2010. But yes, it would be prudent for the company that they go and liquidate the entire chunk held by Petroleum Trust as well as by 3 subsidiaries on or before 31st March 2010.
Does the market has the appetite for this $6 billion of treasury stock, or $6 to $8 billion treasury stock which is lying in Reliance balance sheet?
Sajid, as I said, I don't think that one should really take a call as a market appetite. As we have seen that first chunk has been picked up by LIC. And all the second and third chunk, the moment we'll get the name, they are all institutional investors. The entire money has been, otherwise would not have come in the market. So it is wrong to say that 9 billion would get drawn from the secondary market or by the investors by liquidating an equivalent quantity in the secondary market. This is a fresh set of investors. As I say, that the homework has all been done by the company. So this is just the matching investments having arranged by the company. So one could say that there is equal appetite by the institutional investors as well.
Okay, I'm afraid I'm going to have to interrupt you, Mr. Tulsian. Suzanne, we've got many more questions, but we've completely run out of time. Many thanks for joining us on What's Hot this evening, but still ahead.